Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes, and it is only going to be a few minutes, we are going to look at the IWM, which is the ETF for the Russel 2000. I want to keep this short purely because we're just saying the same thing, aren't we? Saying the same thing every single week we look at this, and until we get confirmation of a breakout and an Elliott wave count which supports it, and momentum that supports it, and price action that supports it, we can't be sure of what's going on. So let's just recap some old ground here, and maybe throw another little wave degree onto the chart. I think that's all we can really do. So in the bullish count, we topped out in the wave 3 back here. Okay, we've since had this complex WXY correction to here for a primary 4. We've then gone 1 2 1 2 and now 1 2. Okay, so we just keep adding to this thing as it develops. This is ranging price activity. This is just the way it is. So 1 2 3 4 5. Sooner or later one of these counts will prove to be correct. Minuet into minuet, that's right. So this is a 1 2, and now we're going to rip higher in a 3, finally break this level here, and then come back to back test it. That, I think, whether it happens immediately or whether it happens later, it has to happen. You know, the amount of trading that's been going on. Here's our point of control right through the middle of all this range. Here's our volume profile. You know, if we break out, we'll come back to test all these highs. Whether we do it as part of a smaller minuet or minute wave count, or whether we do it as part of something bigger, we'll have to wait and see. You know, we need to see a breakout happen at all first. So we came back to the 23.6, which is a perfectly normal target for our wave 4 here. Didn't quite make it down to the 38.2. And that, ladies and gents, sums up our bullish count for the IWM. We have put in another little wave degree and we will break higher to new highs if the bullish count is correct. So let's get rid of this, get rid of that, and let's bring up our bearish count. And we just need to add this new little wave into our bull folder. There we go. And hide this now, and then bring up our bearish count. And so we've gone 1 2 1 2, correct, in our bullish count, so we now get to add a new wave degree to our bearish count, which is 1 2 3 4 5. Okay, and this is a minute degree. So a quick recap. So you can see how the backwards and forwards waves, internal corrections that we're having of all these swing low, swing highs, it can just be interpreted either way. So until you get a breakout and a flush down in an impulse, or explosive move up in an impulse which can be identified, okay, you can't be sure of what's happening because there's just so much potential in all of this sideways movement, all this coiling of price action, all this coiling of pressure has to give. It's either a launch pad, right, with underlying strength, or it's a rocket that's ran out of fuel, it's gone into orbit, and now it's going to burn up in re-entry. It's one or the other. Okay, we can look for clues, but until we see decisive price action, until we see decisive shift in support in volume, and shift in the momentum indicators, we can't be sure. So we add another 1 2 at minute degree. So while we're here, solid, let's add another 1 2 at minuet degree. Right. We're moving stuff on and off the chart frequently at this point anyway, so we might as well just log it. Add these into the bearish folder. Okay, that's right. So, bearish situation, let's just have a quick recap. We've peaked in a 5 of a 1. We've gone 1 2 intermediate degree, 1 2 minor degree, 1 2 minute degree, 1 2 minuet degree, and then 3 3 3 is gonna come next if this count is correct. Okay, sooner or later, when this gives, whatever it is, like I said, rocket out of fuel or launch pad to higher highs, whenever this gives, it's going to give violently, and you know, that's just, I think, pretty much a guarantee. To the downside, we've got, and I pointed this out before, we've got absolutely F-all market acceptance in this gulf. There's just nothing here. So the idea that you would just rip through here is absolutely normal. You know, I would expect to see price just flash through here. You know, whether it does or not, I'm not psychic, but that's what I would expect to see given the volume profile, given the lack of support, lack of market acceptance, lack of tested resistance. You know, let's just do some basic technical analysis for a minute and say, what have we got down here? Okay, so from the bear targets point of view, we've got a gap here, right? We've got the 50 Fibonacci retracement. We've got the 61.8 fib retracement around this volume, a gap at the top of this volume, 50 at the top of this volume, and then what have we got from a basic analysis point of view? Alright, so let's just smack a line through this gap, which we just covered, this high and this high, right? So this is basically, this is resistance, bump, bump, bump. Right, so this is going to be support, and look where it comes to. It comes to the 50, it comes to the gap, it comes to this, it comes to the volume profile. It's after all this gulf here. If the price breaks out of that range, this is where it's going. Okay, it may not get there in a heartbeat, but it would get there quickly, would be my guess. Okay, and yeah, that's all I've really got to say. If I'm just going over the same ground over and over again, until this range breaks, I don't think we've got anything else we can consider. Is there one other thing I can do? Let me have a think. That's our range. Bear targets. Let's get rid of the bear count for a minute. And let's throw up one more alternative, shall we? Let's just put a line here. I did this months and months ago, but the sideways action just didn't seem to support it at the time. I mean, with the momentum, we were expecting to see compression forming for a triangle. So let's, but now since we are still setting lower highs and higher lows, lower highs and higher lows, maybe it's possible that this thing is a triangle. Now, in this case, this is 100% in support of the bullish case, right? So if you continue to get higher lows and lower highs, and we potentially complete a triangle, then this is a wave 3 into a 4, which is yet to complete, and then this will go higher. So we'll pop this on the chart. We'll just take that simplified Elliott wave, and we'll type for our group name possible triangle. Okay, and that's about the only thing I can add for this video of any new consideration. So there you go, bullish and bearish case for the Elliott wave count. Now let's just get rid of all the rest of the Elliott wave count, and we'll do some basic technical analysis to wrap up the video. So, what have we got here? Let's back out to the weekly time frame, bring up our moving averages. Okay, so for our moving averages, we have a 10 in yellow, 20 in blue, 60 in orange, and 250, a million zillion miles away below us, in green. Alright, so what have we got here? Below, well, we're trading exactly around our 10 and our 20. Exactly around it at the moment. Above the 60, above the 250, trading in this volume up here. Trading in this volume range up here. Tell you what we'll do, let's just throw up the volume back here, okay? See if there's any clues. Mild increase in volume here, but we have a bearish bar, bullish bar, bearish bar, which are all level with one another. More sideways action. We've had a peak here, we've had a peak here, you know, so nothing out of the ordinary. Trading inside of the same range here. No violent move in volume. MACD has been heading down towards the zero bound the whole time. We're almost there, having reached very high levels. RSI went from very overbought, shifted down into the neutral zone. We've got underlying bullish divergence between previous price action and current price. We've got low, higher low, higher low, right? But we've also got low, high, lower high, lower high. Now we haven't got divergence, bearish divergence in the purest sense because we don't have higher highs in price. We just have a loss of momentum, a cooling off. And this is where, from the bullish perspective, things always seem to... I flip-flop all the time on this, obviously, because until we get a confirmation of a break of this range, we can't be sure. But whenever I look at the momentum, and I don't see divergence between the highs, right? We got divergence here. No, we didn't actually. Sorry, excuse me. On the weekly time frame, we just peaked. Okay, and then we just drifted off, and then we just drifted off back towards the zero band of the MACD. This looks more like cooling off a excessive move rather than a total loss of momentum. So, like I said, I often flip flop. I look at the volume profile and I see the gorge of death here, just waiting to gobble us up. And then I look at the momentum and I think, well, it doesn't look that bearish. We've had some bearish momentum here, then it started to cool off. It could just be a big time-wasting move. Alright, so anyway, that's the weekly time frame. Let's look at the daily time frame here. So now the daily time frame also kind of supports this idea. Now, I don't want to give you the impression of any bullish bias because I have no bias either way. I'm just talking what I'm observing. So cooling off, the idea that we wait for some significant support to come to us rather than us going down to find support. I've said this multiple times and I've pointed this out in education videos on the Discord as well regarding technical analysis, which is what you don't correct in price, you correct in time. So if you're not going to go to the support, you have to wait for the support to come to you, and that's sideways price action right there. That's the definition of sideways price action, of ranging. We wait for support to come to us. So on the daily time frame here, we can see low, higher low, higher low, higher low in the RSI, right? That is underlying bullish pressure that's building up. Right, so that supports the bullish idea. We have this. Well, there's nothing in the MACD to really convince me that anything's bullish, and the volume on the daily time frame is still just, there's nothing going on. The only other thing from the bullish perspective is all of this sideways movement, this time-wasting sideways movement, has given plenty of time for the 250-day exponential moving average to come underneath into the range as potential support. Okay, so that's, like I said, what you don't correct in price, you correct in time. So if you were to imagine an axis here, y, x, like an inverted graph, then you can either, having come up, correct down to support, or you can move sideways until support comes to you. And that's essentially what we've been doing here, I think. So, could still go either way. Elliott wave count is none the wiser. A break of this range is what we need to see, and I imagine the initial shakeout when that break comes will be pretty immense because everyone will take it as a signal, right? So if everyone takes it as a signal, it means that the market's going to try and fuck you as much as it possibly can, because that's just the way it goes. So the likelihood is, if you breach to the upside, and people chase the breakout, there will be a flush back to test for support, which will shake out the leverage traders, which will shake out the margin, right? And then we'll move higher. I'm not saying this is a guarantee. Now, the same's likely if we go lower. We'll flush down in that 3, right? People will chase the breakout, and then we'll reverse to test for resistance, and that will shake out the margin and the leverage as well before actually heading lower. It's just very normal when you break out of a range to do that, because people get so bloody impatient and so anxious to get into the trade that they tend to chase momentum, and the momentum turns around and just fucks them. You know, I've seen it thousands of times. So you have to be on guard either way. You know, so yeah, that's it. That's the way I see the IWM at the moment. I know it's the same old story. We've been going over it for months and months and months, but there's nothing clear here yet, and we have to wait. It could still go either way. All right, guys, take care of yourselves, and I will be back with you shortly or later in the week. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And thank you as always to my Patreon subscribers. If you're interested in joining the Patreon, it's the perfect time to do it, as it's the start of the month, so you get a whole month's value and you won't be charged again until the first of the next month. There's a link in the description below. If you're interested, go over, have a look, read the tiers, see if anything takes your fancy, and feel free to sign up. And also, if you're not following me on Twitter yet, there's a link to my Twitter feed also in the description below. Alright guys, take care, and I'll be back with you soon. All the best. Bye bye.